All right, my beautiful friends, here we are. This is my markets, a look ahead segment. This is Sunday, February 23rd, 2020. All right, people, I want to direct your attention yet again at the yield curve. I have explained to you all for I don't know how many years now that we need to keep our eyes on the yield curve or the debt market. This entire thing, every aspect of this market derives value from what's happening in the debt market. Henceforth, why? The debt market is now the most distorted, rigged aspect of the financial system on a scale that is almost too big to get your head around. And because of the distortions that exist, again, we've never seen anything like it in the debt market, nobody knows the real price action of any asset at all. The stock market has been distorted beyond your wildest dreams. We are in the biggest stock market bubble the world has ever seen. This is the truth because of the absolutely off the Richter scale rigging that has been going on in the debt market since the last meltdown. And I've explained to you that the 2008, that was the party over moment. And right now, this is all just life support. It's a drug. Debt being pumped into the debt market to artificially inflate the price action of the stock market, reinflate a housing bubble. And again, there's not a single asset today that has a real price discovery mechanism. Gold and silver, the most rigged assets on the face of the earth, second to maybe the debt market because of deliberate price suppression. And I explained to you, they're having a little bit of a hard time suppressing the price action of gold and silver. JP Morgan is public enemy number one when it comes to rigging the price action of the metals markets. This is common knowledge. They get caught over and over again rigging it. Nothing ever happens. Nothing ever will happen. But there's going to be a moment, and maybe we're seeing it now because of the action in the debt market, where these prices are going to become very real. Everything is going to become very real. And that brings us right back to the debt market. Now, what are we seeing here in the debt market? It's an incredible situation. And I've covered this to the point of nauseum as of late. We have a yield curve inversion. We have the entire curve. Let me show you this. Let me just show you this. I happened to glance at it this morning. You can't see these numbers, I don't think. But look at all the red. You see all the red? That's from the 1 month all the way out to the 30 year. Okay? Why is that? The entire curve is flattening, inverting, and dropping. Okay. Now, I want you to think about what I'm going to tell you. I covered it just the other day. The 1 month Treasury yield is dominating the entire yield curve except for the 30. The 30 year is 1.91 when I just looked. The 1 month is 1.6. Now, again, people are fixated on the stock market. Yeah, sure, we had a sell-off on Friday and people are going crazy. Oh my goodness, the Dow didn't even fall 1%. Again, this is how brainwashed people are. Don't look at the debt market. No. Focus on the stock market that is still near all-time record highs. Again, this is a game to keep the illusion real. But by understanding what we're seeing in the debt market, we can gauge what's happening in the rest of everything else that we really should be looking at. Okay, understanding that the debt market is where every asset derives value from. Okay, let's keep that in mind. So the stock market is a derivative of the debt market. Period. The end. All right. We all know how the derivative bubble that we are in. It's again in the who knows? No one knows how big it is because of dollar derivatives, debt derivatives, everything that's associated with it. This environment is so bad that we are in now, and we're all going to pay the price at one point. I think we know that. That's why we are betting against the debt, becoming our own central bank, holding hard assets, getting prepared, whatever way you got to do it. So let's go back here to the debt market. Understanding that this entire thing is going to get real, watching the action in the debt market, because the debt market is going to get real beyond anyone's wildest imagination. And this is not just Greg Mannarino saying this, and I've been saying it for, I don't know, an entire decade. I talked about the first yield curve inversion. No one believed it would happen. Even my closest friends didn't believe it would happen, but I was correct on that first yield curve inversion, and I said it would happen years before it did. I also explained to you what the Fed is doing now with this repo scam, passing cash back and forth between the banks overnight, pumping tens of billions of dollars into the repo market every single day to try in an attempt to keep the short end of that curve pinned down. If they were not doing that, could you imagine what the yield curve would look like today? It would be unbelievable. They're also trying to fake the illusion of liquidity. This is the whole basis behind the repo scam. It is a scam. Period, the end. And we are running into an issue with regard to liquidity in this market. They know it. And the Fed is prepared to pump more debt into this market that you can possibly even imagine. This is the end game, to be the lender and buyer of last resort. Now, with regard to the yield curve, I'm going to go back to it again. The fact of the matter is, it's going to get much, much worse. Much, much worse. You are going to see this yield curve drop further. You're going to see it invert further. You are going to see eventually, and this is what people are looking for, and I want you to focus on what I'm going to tell you right here. Wall Street is concerned about one thing, a 2 to 10 inversion. In other words, when the 10-year yield is less than the 2-year. Okay, until that time, Wall Street's going to more or less ignore this. And Wall Street knows, just like I know, just like you know, the Fed is going to pump more debt into this market. Now, to me, as we are watching the debt market melt down, we got to keep our eye on that 30-year. I can't imagine a scenario where the 30-year is not going to continue to drop. I'm not saying it's not going to waver around. It's a random walk with a drift to it. In this case, a downward drift. Okay, the stock market, random walk with an upward drift for the most part. Now, let's talk again about the yield curve. There's going to be a snapback moment here, people. Understand why. Right now, the Fed is pumping the debt market in aggregate, the entire curve, in an attempt to keep cash flowing into the stock market. That's what this is all about. Keeping yields suppressed opens the doorway for cash to move into the stock market. This will continue until it doesn't. Stop focusing on when's the date, when's it going to happen. Nobody knows. Nobody knows, and I don't give a damn who they think they are. Nobody knows when that's going to be. So why focus on something we have no idea? But what we do know is watching the debt market is a big tell. Again, we are about to see the entire yield curve further invert and drop. This is going to still leave that doorway open for cash to flow into the stock market. This is the whole scheme behind it. As the Fed issues in their end game, their final solution to be the lender and buyer of last resort. Now, what we're going to see at one point, and Alan Greenspan, other really bigwig people out here are saying the same thing. I've been talking about this for years. There's going to be a moment when we get a massive sell-off in the debt market when entities, individuals are saying, why am I holding a debt unit for decades that I'm guaranteed to lose purchasing power holding? Now, we understand who's buying the yield curve right now. This is the Fed. They're buying the entire yield curve. No individual in their right mind would be holding a government debt instrument here. You got to be distorted. worse than the yield curve, to be holding a debt instrument that you're guaranteed to lose money. But again, it's part of the rigged game. It's part of the look here, don't look here. Why do you think that so much time is dedicated to talking about the stock market on CNBC, Bloomberg, Fox Business, and about a fraction of the time is allocated to focusing on the debt market? They don't want you to look there. Whenever you have a politician saying, look here, don't look here, or if you have the mainstream media forcing something down your throat that they want you to look at and focus on, you got to say, what's really going on here? You got Larry Kudlow telling you to ignore the yield curve. Well, that tells me I should be looking at the yield curve. You understand? So understanding what Wall Street's looking at. Wall Street's waiting for a 2 to 10 inversion. Until the 2 to 10 inversion occurs, for the most part, the hedge funds, the Wall Street investment banks are going to ignore the yield curve and attempting to leave that door open for stocks to move higher. This is the scenario we are at. But to me, my eyes are not just on the 2 to 10. My eyes are on the 30-year, watching that continue to drop, watching the entire yield curve drop. This is where your eyes should be too. So where's the big tell, the tell of tells, when this market is going to become very, very real? When the debt market begins to sell off. How are we going to be able to see that? Because rates are going to spike rapidly. When the yield curve starts to sell off, you're going to see yields rise in a rapid fashion. And just as suppressed rates have allowed cash to flow into this stock market like we've never seen, it's a hyper bubble on the back of the debt bubble, you're going to see a massive amount of capital leave the debt market. You're going to see a massive amount of cash leave the stock market, a complete and total meltdown, and cash is going to move into other assets. It's going to move into gold, silver. I still believe it's going to move into cryptocurrencies as well, looking for alternative places. It's going to go into other assets too. It's going to go into artwork. It's going to go into musical instruments. You're going to see all kinds of things happen when this becomes real. And again, it's designed to become real. It's designed to destroy anyone that is on the long end of this market and can't pull their cash out of this market like I just did on Friday. Most people don't have the ability to go into their account and sell whatever they want to sell. They're locked in there for a deliberate reason. They're locked in there to keep their capital in there while the wealth transfer occurs. You understand? What I did on Friday, I said, you know what? I'm pulling my cash out of this market. I'm closing my core positions. Why? Just in case we're on the precipice of a bigger sell-off, and I want to talk about that too. I know this is a long video, but I'm covering a lot of stuff here. Okay, Friday, nothing major happened. I pulled my cash out of this market because I'm watching the debt market. Not because of what the stock market did on Friday. The Dow didn't even fall 1%. And if cash starts to go back into the stock market, what will I do? I will reallocate positions again into a core holding, and then I trade around it. You understand? That's what I do. This is how I play the game. Not everyone can play it like I do, but this is what I do. If you're a trader, if you have access to your own capital, you know what to do as well. If you're at that level of sophistication, I think you have a handle on what's going on. And plus, if you follow my blog, I think you have a really good handle on what's going on here. So for me, in the very short run here, if we get a continuation sell-off tomorrow, if this market sells off tomorrow, you have to keep your eye on something. And I've spoken about this a lot of times. If you get a sell-off on Friday, even a less than 1%, with a follow-through sell-off on a Monday, that is a big tell that further losses are likely in the stock market. Understand? That may be a reason to start getting short the stock market as well. But until we see a 2 to 10 inversion in the yield curve, Wall Street's going to ignore it. Wall Street's going to ignore it. At least they're going to try to ignore it. So let's keep our eye on the debt market, people. Refocus on what's going on. Don't focus on what the mainstream media or what the politicians want you to look at. If they're shoving something down your throat, that means you need to be looking elsewhere. I think this is a no-brainer here, okay? Don't be distracted. Don't be deflected. That's what they want to do, distract and deflect, distract and deflect. Focus on the polar opposite of what they're telling you to look at. All right, look, I know this has been a very, very long video, and maybe some of these concepts are difficult. Okay, understand them by maybe watching the video twice, think about it, maybe, I don't know, put a little time towards focusing on these things, people. Look, I promise you, I will keep all of you on top of this market as far as my ability will allow me to do. Am I going to be right 100% of the time? No one can. It's absolutely impossible. But if you look at my record going back as far as you want to go, I've been right 90% of the time, maybe even more so than that. And that is frightening. It really is. Sometimes I scare myself. I was on the phone with one of my buddies the other day. JP, are you out there? And we were talking about this. It's the truth. I sometimes wonder where it comes from here. But the truth of the matter is, I've kept all of you on the right side of this market since the election of Donald Trump. Have I been wrong a few times? Sure I have. But the amount of times that I have been wrong is minute. So understanding that what I'm explaining to you with regard to the debt market, what Wall Street is looking at, the 2 to 10 inversion, the entire yield curve, the game here that they're deliberately creating this environment of risk, pushing cash into the stock market to hyperinflate a bubble is a deliberate act. They're doing this on purpose to foster in the largest wealth transfer that has ever been seen in the history of the world. And a move, or we're already there, a 2-2 society is already among us here. We have a redistribution of wealth under Donald Trump. A third bailout for the farmers is looking like it's going to take place here. More bailouts are coming. And again, what is it called when a government redistributes wealth? Well, you let me know what you think that is. Okay? All right, look, I'm out of here. Very long video. Please share it. Think about the concepts I've discussed here. And I will see you all in the morning. Love you a lot.